Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the CCI Pro Traders, and our website is www.dayprotraders.com. The title of the video is Learn to Master the CCI Indicator Step 5. Learn to master the CCI indicator step 5. All right. So I believe that you have already watched part 1 to 4, and you have learned a great deal out of it to improve the CCI indicator trading. The CCI stands for Commodity Channel Index. In this video, I'm going to show traders, we're going to teach traders how to trade the overbought CCI. So in the previous videos, I was highlighting different aspects of trading the overbought CCI, and what I said to traders, that whenever we hear the word overbought, the first thing that should come into our mind is that the price is at a resistance zone. We must now highlight the resistance zone on the charts. All right, this is very important for us, okay, in order to achieve consistent winning trade. All right, when the CCI is overbought, it's above the level of 100. All right, I also demonstrated to traders that sometimes the CCI may not be above 100, but the price will be at a resistance zone. We will acknowledge the price and trade the price instead of trading the CCI. So even if the CCI is not above the 100, but the price at the resistance zone, okay, the price is at overbought zone, and the CCI though is not above the level of 100, we can still talk about overbought, okay? So the best approach to avoid CCI trading mistakes, okay, and to make excellent technical trading decisions, one must not violate the market pattern in order to identify the best setup, the best overbought CCI trading setups, okay? The number one market pattern is the declining channel. So here, I have the declining channel here, but if you have already watched the part 1 to 4, you can notice that I have been highlighting different aspects of the overbought CCI, what we need to pay attention to, okay? So that's why we are recording this part 5 to clarify more things that traders need to know in order to master the CCI indicator, okay? So here we can see that I'm on a monthly chart. Though I'm on a monthly chart, this strategy, we can apply it on the hourly chart, on the 50-minute chart, on the 30-minute chart, on any time frame. Okay, but for the purpose of this demonstration, I'm using a monthly chart. Okay, so you can see there was a high, the price has displayed a high here, followed by a lower high. Okay, so when we see a high followed by a lower high, it's telling us that the bullish momentum is diminishing. Okay, but it doesn't mean that the bullish momentum is finished completely. All right. But it's just telling us that it's diminishing. It has decreased significantly, all right? But now, so this is the first verification, a high followed by a lower high. The next verification is that the price might display a lower low compared to the previous low. So this is the previous low here. So we want to see a high followed by a lower high, and the price display a lower low. Okay, we talked about this already, all right? But pay attention. Now we want the price to pull back on the edge of the declining channel and to display again a new lower high right here. So this is a what? This is not a signal to sell straight away. This is a bearish trade setup on a monthly chart. So as soon as you see the first candle here, I hope you can see the first candle here. I'm going to pay attention to the vertical line. You see, after that candle is closed, because anytime, if you're on the hourly chart, you wait for the hourly candle to close. If you're on the 4-hour chart, you wait for the 4-hour candle to close. Don't start, okay, calling this a bearish trade setup, okay, before the candle that is touching the trend line is closed. If you're on the 30-minute chart, you wait for the 30-minute candle to close. You're on the 50-minute chart, you want the 50-minute candle to close. You are on the 10-minute chart, the 10-minute candle to close. This is very important. Candle is closed, all right? So once the candle is closed, a high, a lower high, plus a lower low, prior retesting, okay, the bearish trend line of a declining channel. So we can draw a common set trend line like this. So you see here, it touch it here, but you can see that the price still above, okay, this common sense trend line, okay? But nothing can stop you to call this a bearish trade setup at this point in time. See, touch it here, this candle here is closed. What we need to do, we need to apply what? A top-down trading method, or a multiple time frame trading method, or the trading drill. So the monthly chart in this case is, okay, our trading setup time frame, okay? Now, the purpose of using a multiple time frame trading method is to use more than 2 time frames. So one can use 3 time frame, one can use 2 time frame, depending on what you are trying to do and what technical indicator you are using or how you build your trading system, all right? For instance, for TSTW24 traders, a setup, then the first best time frame for day trading, all right? For a swing trader, it's better to use at least a 3 time frame, and when we are using a top-down trading method, okay? So for on the monthly chart, this is, you can see that the CCI is overbought above the level of 100 right here. That's the red horizontal line here. It's overbought, and the price also on the edge of the declining channel. After the price has displayed a high, a lower high, followed by a lower low. You see, these are the verification you need to do. A high, a lower high, a lower low, and price retesting the edge of a declining channel. Okay? All right? So this is a bearish trade setup. Another thing I want you, okay, I don't want to confuse you now, so I leave it like this. We'll talk about it in another video, all right? So let's stick to the point. So this is a bearish trade setup. So from the monthly chart, for instance, one can go to the daily chart, use the daily chart, for instance, as a signal time frame, all right? So the signal may be on the daily chart. We see the price coming out of a rising channel and coming out of it like this, break below the rising channel and retesting the rising channel on the edge. That will be the signal for us. So you see, am I making sense to you? Okay. Okay. So somebody swing trading using the CCI overbought. So on the daily chart, for instance, so monthly chart is our trading setup. One can use, okay? I'm not saying you have to use our daily chart. One can use 2 days chart. One can use another time frame for the signal. The purpose is to know when the signal has been fired. All right? 1, 2, 3, go. All right? So we want to, for instance, all right? There are many ways trader can trade. So break out of the rising channel on the hourly chart and retesting the rising channel on the edge on the hourly chart. That will be our signal, for instance. Okay. Then one can, for instance, again go to 30-minute charts. Okay. For the entry. But what I say to trader, when it comes to the entry, there's no limit to the time frame we can use. So we can use 30-minute chart as an entry time frame, but we can break it down, zoom into it. We say, okay, 30-minute chart, okay, breakout coming out of a rising channel on the 30-minute chart, retesting the edge of the rising channel on the 30-minute chart. And then, okay, we say, all right, I want to zoom into it more. Nothing can stop me to go again, drop it down to 50-minute chart. And if I want to control the risk more, I can break it down more, even to 5-minute chart at the point where I'm about to enter the trade. Now, this video is not about the top-down trading method. It's about, okay, learning to master the CCI indicator. So the point of this video is to be able, okay, at the end of this video, one will be able to identify, okay, the best overbought CCI in a declining channel. All right. So this is the point. So the verification we are doing a high, a lower, low, prioritizing the edge of the declining channel. This is okay. A bearish trade setup. When the CCI indicator is above the 100, it is overbought. As I explained to traders before in this series of video, learn to master the CCI indicator. In the previous video, I said to you, all right, that the CCI being overbought does not mean the asset itself or the stock itself or the currency pair itself or the financial security itself is overbought. The CCI may be overbought, as you can see here, it is overbought here, but the price was not overbought. See here, the price was in a rising channel. Remember what I said to you, in order to achieve consistent winning trade or to use the CCI more accurately, one must not violate the 3 market pattern. So you should be able now to trade the CCI, okay, like an expert, all right? So you should begin to improve your CCI trading at least. So here you see the CCI was overbought, telling us that the price at a resistance zone, which means price at resistance zone, but the price break above the resistance level, the warning line, and find a support, we will buy instead. When other traders are busy selling the CCI because the CCI is overbought, they are selling the CCI and the CCI goes down, but the price was not overbought and the price goes up. Are you trading the CCI or the price? We are trading the price, okay? So the 3 market pattern will allow us to make excellent decisions, especially in this case, to trade the best CCI overbought. So the drill is very simple. We can go to the 4-hour charts, okay? A high, a lower high, and a lower low, prioritizing the edge of the declining channel. And the CCI is overbought on the 4-hour chart. That's a bearish trade setup. We can break it down again. 50-minute chart as our signal time frame, and then zoom into it for entry point, 5 minutes, 3 minutes, whichever you want to choose, 10 minutes, okay, and then enter the trade like a professional trader. If you are a new trader, what I recommend to traders, use a demo account, okay? You don't understand anything, okay? Or you can go to our website, contact me, and then ask a specific question about the CCI, and I will be happy maybe to record another video. I may not reply to you directly unless you are one of our traders, but I may post another video again to clarify, okay, if need to be, okay, your question, all right? Or I may recommend you to another video which maybe I already recorded to answer your question, all right? It makes sense? So here, this is, we are now able to identify, okay, valid overbought CCI. When the CCI is overbought and the price itself also is overbought. But we will not sell straight away on the spot. That was the old way of trading. It makes sense? So, as I explained to you, CCI overbought is pointing to us resistance level. You see here, the price drop it down here and change the direction here. The previous low, price D below the previous low, which is the blue horizontal line here, and retesting it also on the edge. As I explained to traders, when we are using a trend line, okay, a trend line, we want to combine it with a static horizontal support or resistance level. You will see that the best trade setup occurs at the intersection point between a trend line and the horizontal resistance level. It's a beautiful, beautiful bearish trade setup. All right, beautiful. And you will use a top-down trading method. You enter the trade, okay, on the edge at a low-risk entry point. And if the signal fails, you just come out again and wait again. You know exactly what you are looking for. And if the music is changing, you know. You want to check also the economy news at Google Finance, at Yahoo Finance, okay? So at this point in time, we'll go to Google Finance, put the epic of PFE, Pfizer, like I like to call it. Traders say to me, no, George, it's Pfizer. Okay, Pfizer, all right, correct. I like to call it Pfizer, okay? So Pfizer stock on the monthly chart. Now this is a bearish trade setup. We'll apply the trading drill, Okay, check the economy news, the fundamental, perform Google Asset tests, check the market itself, the S&P 500, this is about it. Going deeper, deeper, all right? So let's stop there, okay? Let's focus on the overbought CCI. Here again, you see what has happened again? This is again another bearish trade setup. Are you with me? So let's see whether this is correct. A high, a lower high, and a lower low. So you can see that here, if the price does not display a new lower low, we want to be very careful. So you can see here, where are we? We are here. So this is the, you see this tail here, the price went all the way here. But I will stop here, okay? You see, it makes sense? Okay. Let's draw it more horizontal. It makes sense, okay? Something like that, okay? So this is the previous low. Price break below the previous low. You see, retest here. This is a sell. Trader sold, you see. Break below, retest. Common set trend line. I don't want to draw again. Common set trend line is broken. It is sold it. Price rally up again, but this is a tricky place near the media line of my blue channel. But when you are selling near the media line, it's not the best place to sell. Okay, it's not. The best place is on the edge here. You see some traders sold it here, but it's not. It was a great sell because the common set line is broken, and gently it went back down. But look, the price returned back to the best place. See, you see, it went down a bit and then went back up. This is why it's so important to use a top-down trading method. All right. So you are controlling the trend. You are not just hoping. So it went down, started going up. So you were fast in profit. Now it started going back up. You're wondering, is he going to take you out? What's going to happen? But if you want, you can close that trade and wait again. Close it because you are controlling it. Close it, come out, come back in. All right. If you don't want to, minimize the risk and control it carefully. Reduce your stop loss. You say, okay, I don't like it. It's going back up. Okay. All right. Use a top-down trading method and control the risk. And pay attention to the economy. So here we have a high, a lower high, and now you see a lower low. Even here, see a lower low, but it didn't touch it down. A lower low, you see this one, lower low, before coming back to the edge. So we did our verification. A high, a lower high, a lower low, prior testing the edge of a declining channel, and the CCI is overbought. At this point in time, you should be able now to use the CCI, okay, like a professional trader. Remember what I said to you, do not violate the market pattern, use a top-down trading method, pay attention to the economy news and the fundamental. As I said before in many videos, if any traders recommend to you, do not pay attention to economy news, run away from them, all right? Can run away from them, okay? Now, this is a joke. You will hear sometimes professional will say, I'm a technical trader, okay, I use technical alone. What they meant by that, they trade technical, but they are aware of the economy news. They are aware of it, but they don't use it to make their trading decision. That's what they meant. It doesn't mean, you see, for instance, trading firm, you have a team that is a fundamental team that trader will meet in the morning, they will talk, and they will do the fundamental, okay, analyst will say, well, be careful, this blah, 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 fail a seed test, blah, blah, blah. And the traders are listening because the traders, they trade. Most of them are technical traders. So they know the news, they know what is happening in the market, but they are technical traders. But sometimes traders are trading and they don't even know that today there is a major economy news relating to Pfizer. They don't know that, okay, there is a very important announcement will be made by Pfizer today, or any economy news is likely to affect this stock, which is crazy, all right? So you want to know, it's like you want to travel or have a barbecue, all right? So you want to know whether you have to have a beautiful weather, you have barbecue, you want to have a sunny weather, all right? So you check the weather, you choose the best weekend to invite your friend. So this kind of activity, the same thing we do when we are trading, we check the market environment, the economy news, the time of the day. For swing traders, what I recommend to swing traders, I like to enter my swing trade on Tuesdays, not on Monday. Okay? So this is another video I'll be recording later on to share a few tips and tricks that they can use when they are trading the CCI indicator. It makes sense? So here again we have, okay, a bearish trade setup when the CCI is overbought, pointed to us a resistance level, which is the previous low here. We draw our money line and we use a top-down trading method. Once again, you can see it came here. So we have again a high, a lower high, and a lower low, prior retesting the edge of the trend line. But traders who understand a little bit about Elliott wave will know that sometimes the price does not go down forever. So for traders who understand a little bit Elliott wave, we know that this is a flat correction that was taking place here, followed by 1, 2, 3, 4, 5 move down. All right. I don't want to talk about Elliott wave. Go to 24elliottwave.com if you want to know about the flat correction. So the Elliott wave traders will not look at the chart. They will look inside the chart and know where they are. And this will allow them also to make better decisions. But suppose you don't know anything about the flat correction, you don't know anything about Elliott wave, and you are not prepared, and you don't believe in Elliott wave theory, which it is a little bit crazy not to know a little bit about it. All right. So here, if you don't know anything about Elliott wave, so you touch it here, okay, you say, all right, a high, a lower high, a lower low, prioritizing the edge of the declining channel. Okay, it's a very straight setup. So you will draw a line there, say which resistance. Again, if you extend it, it's in the zone of the previous. You can see that there. If you look carefully here, this previous low become a resistance. See this candle here pierce through it to touch the zone. And here it is, this is the resistance that the CCI is overbought, above 100. A bearish trade setup, not a bearish signal yet. So, okay, so we can, on the monthly chart, we draw our common set trend line like this, okay? So, after this candle here, you see this candle pierce it through. Sometimes the price will run too fast. If you run too fast, stay away, all right? It's like catching a fast train, a high-speed train on the track. Don't do that. Wait for it to come to the station, all right? Don't try to jump onto a train, all right? So here, because the reason why I'm saying this, sometimes traders say to me, George, 5-minute chart, 10-minute chart is too high for me, all right? Okay, the price sometimes goes too fast. Okay, wait patiently, wait for it to come to a station, all right? So this candle here, close below. You see break below and close, down and dust it. For day trader may start making decision here because they know that the price is at a hot spot trading zone. Day traders may start making money, all right? Okay, day trader can make money in this zone. You see this a whole month here. If you want, you can zoom into it, drop it down to the. So, for instance, you are here, you see it's on the edge. I don't want to wait for the monthly candle to close. You can go to the daily chart or 2 days chart, and then you want to use the daily chart or the 2 days chart as your trade setup. Okay? Instead of the monthly chart, if you don't want to wait for this candle to close completely here, you are in a hurry. All right? So this is a bearish trade setup. Again, we'll apply the trading drill or the trading. Whenever you hear me, I say the word trading drill, trading. Okay, top-down trading method, multiple time frame trading method, that is exactly the same thing. And okay, we check the economy news, and here we are again, it went down a little bit. But here, Elliott wave traders will know that they will be very, very careful at this point in time when they are selling, okay? Because in fact, the price start going up from here, okay? Start going up, okay? Start going up. So you will be very, very careful. You keep your eyes on it because you know that, okay, the flat correction has been completed, and the price is about to go up. So when an Elliott wave trader is selling here, he or she will be a little bit careful. You can see also that the CCI, in fact, I'll be recording a video about the divergence later on, about the divergence of CCI. CCI was displaying higher lows here. And when the flat correction is being completed, all right, yeah, so this is just few things I need to mention to you why the Elliott wave theory is so important. Subscribe to 24 Elliott wave channel, it's 24 Elliott wave website channel, so you may learn from a bit about Elliott wave also. Okay, so the CCI indicator or the commodity channel index indicator is overbought here. And the price is also on the edge after display a high followed by a lower high, and the price display a new lower low, retesting the edge of a declining channel. In this case, we are not violating the market pattern, in this case, the declining channel, and we use a top-down trading method without ignoring the economy news and the fundamentals. If the signal fail, will come out. We can apply this strategy on the 30-minute chart, on the hourly chart, on the 4-hour chart, on the daily chart, on any time frame. In this case, I'm using the monthly chart of the FISIA, okay, to highlight the importance of, using the market pattern together with the overbought CCI. This is the end of this video about learn to master the CCI step 5. I hope you have learned something from this video, okay, and will improve, okay, your day trading and swing trading, okay, like a professional trader. Okay, the best overbought, to summarize this video, best overbought, we want to see a high followed by a lower high, price displaying lower low before retesting the edge of the declining channel. That is a bearish trade setup. We will now apply a top-down trading method, okay, to enter the trend. At the same time, we will verify the economy news and the fundamental. Talking about overbought CCI, declining channel, top-down trading method, all right, without violating the market pattern. We are the CCI Pro traders talking about learn to master the CCI indicator step 5. I invite you now to follow me in the next video where we'll be talking about learn to master the CCI step 6. In that video, I'll be talking about the best setup for overbought and oversold CCI, a different aspect again. Though this is a series of videos, we are highlighting each point clearly so traders can master the CCI indicator. All right? If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. Put a comment below why you disagree with us, okay? If you truly, truly love it, all right? And you say, George, I love you so much, share it on Google+, share it on Twitter, okay? And share it also on any other social network so other traders also may learn from it. Until the next time, enjoy yourself and be very happy. We are the CCI Pro traders. Speak to you soon.